Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're taking a look at 3 top stocks to consider buying for the AI-driven energy boom. And those 3 stocks are Talen, which trades in the ticker TLN, MasTec, MTZ, and Constellation Energy, which trades in the ticker CEG. But before we get into everything, remember to subscribe and leave a review wherever you listen to your podcast, and make sure to check out our Zacks.com/promo page for a look into some of our services, portfolios, and more. Before we jump into these 3 stocks to ride the AI-driven energy boom, I quickly just want to go over the broader case, and we'll start with actually big news from last week that sent the market to new highs was the Oracle report and some of their releases. So Oracle bolstered the case for the artificial intelligence spending boom when it reported its quarterly results on September 9th. The cloud computing giant's backlog soared 360% to $455 billion, driven by spending from AI hyperscalers like Amazon and a blockbuster deal with OpenAI and more. The report and its huge growth outlook could help set up another leg higher for the market. And on top of that, this week, this is just some broader market background. I'm recording this on Monday afternoon, so everyone's expecting the Fed to cut interest rates, and that would be the other pillar of the economy that's helping, or other pillar of the market that's helping the bulls push new highs is earnings growth driven by the AI spending boom and then lower interest rates. So that's why the NASDAQ, S&P 500, and the Dow are all trading at fresh highs. And on top of all this, kind of in the background, along with the AI age, is the energy boom that's going on because of the AI spending and just the amount of energy that it requires. So AI does mark a paradigm shift for energy demand. Generative AI like ChatGPT use 10 times energy of an average Google search, and large data centers consume nearly as much electricity as a mid-sized city. So this backdrop is why electricity demand is set to grow by 25% in the U.S. by 2030 and 75% by 2050. Off of 2023 levels, driven by AI data center expansion, some transportation electrification, reshoring, and more. This will obviously be no easy task. In fact, the size and scope and timeline of the upcoming energy industry expansion are why investors should be excited about the huge upside. And on top of that, big tech and big government and Wall Street are critically taking kind of an all of the above approach to energy and grid expansion. So that's across nuclear, natural gas, solar, battery storage, and more. And we should note that the U.S. government is aiming to quadruple nuclear capacity by 2050. AI hyperscalers and such as Meta, Amazon, Alphabet, and Microsoft have all rushed to secure more nuclear power and made deals with next-gen and established nuclear energy companies, and they're going to help kind of support the renaissance there with their collective $1 trillion balance sheet. And the reason simple that without more power, the energy or the AI boom is set to kind of die in the vine. So without it, it just... we can't have the AI energy revolution or the AI revolution that we are expecting without the AI getting more power, which is why all these nuclear power deals are happening. And without it, we're going to see massive price spikes, potential blackouts. We already saw that PJM interconnection, their prices last summer skyrocketed over 800%. So at their power auction, which is the biggest in the U.S. And then this past summer, it jumped again above those levels. So skyrocketing prices, potential blackouts, it's going to be a huge story. And that's why these energy plays and grid expansion companies are some of the more straightforward investments in the AI age, where picking eventual hyperscalers that are set to dominate, or maybe these next gen tech companies that are saying they're going to have like a big AI app that's something that's going to change the economy. You can't really pick those, but the companies that are certain to benefit are definitely these big players in energy and grid expansion in that part of the AI focused energy ecosystem. So with that in mind, we're going to take a look at the first of these 3 AI driven energy companies to consider. And the first of those is Talen, which trades in the ticker TLN. It's a leading independent power producer that's a direct long-term investment in the growing symbiotic relationship between artificial intelligence and nuclear energy and natural gas. It's an independent power producer and a leading energy infrastructure company. Unlike a traditional utility company, it owns and operates facilities that generate electricity, and it then sells those to utilities and major consumers such as Amazon, which it has a deal with. It owns and operates about 11 gigawatts of power generation capacity across 5 states, including nuclear power. It also has a significant amount of natural gas. And it was kind of at the vanguard of the relationship between AI and nuclear energy. It announced plans to develop data centers at its nuclear power plant back in July 2021. It then sold that data center campus directly to Amazon, and then it landed a long-term power purchase agreement with AWS, so their cloud computing business. And then in June 2025, it expanded that relationship with Amazon to provide more nuclear power at that plant to Amazon through at least 2042. On top of that, it's going to pursue plans to explore next-gen small modular reactor building with that deal with Amazon. So that's a really big piece. And then back in the middle of July, it announced a big deal to buy 2 natural gas plants, one in Pennsylvania and one in Ohio, for about 3.8, so nearly $4 billion. And it's set to boost its free cash flow per share by over 40% in 2026 and then 50% through 2029. It's also crucially set to expand its annual generation capacity by 50%, which is great. As I said, natural gas is going to be really important as well, along with nuclear energy, to these big AI hyperscalers that are requiring more power than ever. Without it, more energy, the economy is just not going to be able to sustain it, and people are going to start to question, why are we letting these AI hyperscalers kind of strain the grid and drive prices skyrocketing higher and have potential blackouts. So this is why, once again, Talen and all the companies we're talking about today are big winners in the AI age. It crushed our Q2 earnings in early August, posting adjusted quarterly earnings of $1.50 per share versus our loss, which our estimate, which for a loss of $1.13 per share. It's now projected to grow its revenue by 11% in 2025 and then 75% next year, to climb from about $2.1 billion to $4.1 billion in 2026. Its adjusted earnings per share are projected to slip 40% year over year, but this is based on first half declines. And so if we look ahead to Q3, we're calling for 160% growth, and then 110% growth in the fourth quarter, and then 300% growth in 2026 off the back of this projected decline in 2025. And its earnings estimates have surged since its last release, with its 2026 estimate up 40%. Its adjusted earnings estimate helping it land a Zacks rank number 1 strong buy. Talen is optimistic about its growth outlook, which they say, quote, is driven by its ability to offer reliable, grid-supported, and regionally diverse capacity to hyperscale, data center, and other large commercial off-takers. And at the moment, Talen stock has jumped around 140% in the past year, including a 45% run in the past 3 months. Despite its huge run, investors can still kind of get in near the relative ground floor on this nuclear and natural gas company if you're thinking long term. And Wall Street's still really bullish on the stock. 12 of the 13 brokerage recommendations Zacks has are strong buys. On top of that, its valuation levels have improved on the back of its longer-term earnings outlook. So its price earnings to growth ratio, so its PEG ratio, sits at 0.9. It's trading, that's offering an 83% discount to its own highs. And then if we look in terms of just forward earnings, it's trading at 22.9 times forward 12-month earnings, which is a 70% discount to its highs and a little bit of value compared to the broader S&P 500, even though the stock has crushed it. Right now, the stock, as I record this midday Monday, it's trying to break out to all-time highs again. It's been on a big run off the April lows, and it's chopped around recently. But as I said, it's trying to break up to new highs along with the broader market. So Talen, certainly another name to put on your long-term AI-boosted watch list. And as I said, these energy companies are going to be more surefire winners than maybe some of the other AI stocks you're looking at. And now we're going to transition to MasTec, which trades on the ticker MTZ. So it's MASTEC, MasTec. It benefits from the energy transition, electrification, grid hardening expansion, and other key long-term trends such as artificial intelligence, such as the AI data center boom. It's a leading national infrastructure construction company helping build, install, maintain, and upgrade massive projects across energy, communication, and utility infrastructure. So I'm going to scroll back up to the top of my notes here, and it's worth noting that in terms of grid expansion, utilities are expected to have to double their transmission capacity by 2050 to support all the energy growth that we need. And the energy sector itself is set to face a really $600 billion investment gap by 2033, just so it shows how much work is going to have to go into this area so quickly. So, as I said, MasTec is certainly one to benefit from this. Their energy transition projects include wind, solar, power delivery, pipeline, industrial process, construction, and more. Its power delivery and clean energy and infrastructure segments have the strongest connection to the broader segment that we're talking about. Its power delivery infrastructure segment spans transmission, distribution, grid hardening, and modernization, environmental planning, compliance, and beyond. So it's benefiting, as I said, from that all-out push to expand energy infrastructure and the grid for this AI boom that we're now pretty confident is going to take place. The company posted another big beat raise Q2, and it closed last quarter with an 18-month backlog of about 16.5, so nearly $17 billion, which was up 23% year over year and 4% quarter over quarter. It said that a significant second quarter new awards in the clean energy infrastructure business led to record backlog levels. So it shows that segment is going to be a huge winner for the company in the near term and the long run. Its earnings estimates have kind of gone straight up over the last year, and its recent positive revisions help it land a Zacks rank number 2 buy, with its outlook for 2026 improved 6% over the last few months. And it lands a Zacks rank, as I said, it lands a Zacks rank number 2 buy, and its building products / heavy construction industry sits in the top 2% out of 245 Zacks industries. And it's worth noting that it's a big part of its bull case, and studies have shown that roughly half of a stock's price movement can be attributed to its industry group. So another reason to take a look at MTC. And if we look at its estimates, we're calling for about 14% revenue growth in 2025 and then 7% growth next year. And then the bottom line, we're calling for 58% adjusted earnings growth and then another 22% adjusted earnings growth next year. So that's really impressive top and bottom line growth outlook. Wall Street's also really high in the stock. 19 of the 20 brokerage recommendations that we have are coming in as strong buys. It authorized an additional $250 million share repurchase program earlier this year as well. And if we take a look at the stock price, its stock has surged about 1,700% in the past 15 years, more than tripling the S&P 500 and blowing away its highly ranked industry's 1,000% run. The stock's up about 40% so far in 2025. And as with a lot of the market and with Talen that we just talked about, it's trying to break out to new all-time highs. It's the last few sessions, it's flirted with its late July records, and now as I record this, it's trying to break significantly above those previous highs, which was, as I said, in late July. So the stock has spiked recently, and if it is able to break firmly above that, we could see it go on another nice run here. And then in terms of valuation, it's trading at a 25% discount to its highs at 27.7 times forward 12-month earnings. So certainly not super bloated in terms of valuation as well, even though the stock's trading at all-time highs as we speak. And now we're going to move on to Constellation Energy, which trades in the ticker CEG. It is the largest U.S. nuclear power plant operator, and it cemented the direct growth link between nuclear power and AI when it secured a 20-year power purchase agreement with Microsoft back in September 2024. The deal will see Constellation restart the 3 Mile Island Unit 1 to help power Microsoft's AI goals. It then followed up that big deal with another 20-year deal with Meta in Illinois that will also help it pursue its next-gen small modular reactor goals. The nuclear standout's also establishing itself as the energy titan of the AI age with a planned $27 billion deal to buy natural gas and geothermal powerhouse Calpine. The deal creates by far the largest clean energy firm and expands its footprint into power-hungry and tech-heavy Texas and California, far beyond its footprint at the moment, which is mostly in the Midwest, the Mid-Atlantic, and the Northeast. It's expected to close that deal in the fourth quarter of 2025. It's also worth noting that unlike maybe if you're interested in the space in general and you're looking at some nuclear energy names, Talen and both Constellation are less speculative than maybe NuScale or things like that. And Wall Street also loves its ability to raise its dividend and expand its bottom line. It raised its dividend by 10% in 2025 after it boosted its payout by 25% in 2024. The company also has said it sees visible double-digit earnings per share growth on the long term, backed by its nuclear production tax credit that it's benefiting from. And looking ahead, we're calling for roughly 9% adjusted earnings growth in 2025 and then 26% adjusted earnings growth in 2026 on about 3% sales growth this year and then 8% higher revenue next year. The stock, unlike the first two, does land a Zacks rank number 3 hold, but its overall earnings revisions have trended heavily in the right direction in 2025, with its 2026 estimate up about 3% in the last several months. The stock is on a relatively neck and neck with NVIDIA since it went public in February 2022. So that just shows kind of the ballpark it's living in at the moment. And it's up about 525% during that stretch, blowing away its industry's 100% run. The stock's also up about 66% in 2025, but it did get rejected at its all-time highs after the Meta news broke in early June. And at the moment, it is still trading decently below those levels, though it has surged above both its 21-day and its 50-day recently. It's trying to edge out above some potentially important trend lines. So at the moment, I'm looking at a chart. It's trying to break above its the bottom of a potential line that could easily see it break out to its all-time highs and then trend way up above that. So if you're a technical trader, it's certainly worth looking at some charts on Constellation Energy. At the moment, it's trading 16% below its average Zacks price target as well, which is worth noting. And Wall Street's pretty high in the stock, with about half of the 16 brokerage recommendations that we have coming in at strong buys. It's also currently trading 20% below its highs at around 29 times forward 12-month earnings. So valuation-wise, it's pretty solid as well. So overall, Constellation Energy's one to put on your radar, as is MasTec and Talen Energy, to benefit from this broader AI-driven energy boom that's happening in the United States now and possibly for decades and decades to come. So that does it for this episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.